Hello, this is Dave, and welcome to Equity Story. And how exciting we're getting closer to New Year's Eve and having a few drinks and a little bit of fun. Um, but what I want to do is that the markets are volatile, and I think we're going to see a lot more of that volatility going to January at the moment, where I'm looking at the price action. There are, funny enough, quite a few important. I think we've got CPI numbers coming out in America on the 14th of January. We've got job numbers coming out this Thursday. There's plenty of action that could move the markets a little bit. So expect the volatility. But what does volatility give us? It's going to give us some opportunities to buy some stocks, some dividend plays. So good stories, solid dividend plays. So what I thought I'd do is have a look at equity story dividend portfolio, and let's have a look. If we get this volatility, can we get some of these dividend stocks if we haven't got them at an even better price? So we'll have a look at those stories. And before I start, just say this is just general share advice and not personal. Um, so let's get going on this. And firstly, just before I do the dividends, I was, it's a bit tragic really, but I was going around having fun this morning, looking at different charts and stories that we like. And certainly for those long-term investors, the FPH, which came out with a good announcement, it couldn't get through. You see how it couldn't get through that resistance? I think it's given an opportunity. It's come back down to trend, and you can see how those candles have just slowed down a little bit. I think this will hold above that 20. So people who want to get in the FPH story, who've got a long-term point of view, I think there's an opportunity at the moment with this volatility. As Elders, it is a dividend stock, and it looks like it's holding above that sort of say $10 level. And that's the first one of our dividend stocks that I think if you're not in this and you're not holding it, it's an opportunity. And what I might do is just stick these dividend stocks on a monthly chart so we can just have a more of a long-term feel where they are. So certainly, as a dividend play goes, if you haven't got Elders, possibly an opportunity at the moment. Um, the next one is Suncorp. So I'll go through the dividend plays at the moment. We can have a look at the charts. We can have a look at long-term charts, and can we see, is an opportunity here? And again, you look at something like Suncorp. That's generally speaking over a pretty difficult period. They had the COVID fall like everybody else, but generally speaking, they've held very sort of dividend strong line, haven't they, from here? And for the last really 10 years. I think if we, if we get a little bit more weakness on it, it comes back down here to that 11, maybe 11.30, 11.50 level. And if you want a bit of Suncorp, paying a nice sort of just under a 5% dividend, I think that would be an opportune time. So maybe just watch it closely this month, and maybe get a little bit more weakness. It's certainly an opportunity. Uh, Metcash, again, I think maybe one of the better stories in this, out of Coles and Woolworths, most probably the best value out of them all. And again, giving a very, very sort of healthy dividend. I'll just, if you bear with me, I'll try and give you the exact dividend what these are paying at the moment, or more or less exact. These websites, sometimes they can be accurate. So they're giving around, I think, a 7% gross dividend, which is pretty attractive for a company like Metcash. But again, I think where they're trading at the moment, around this $4 is possibly an opportunity. Just have a look at this one on the weekly, and again, you can see a little bit of support there on that old trend line, which they more or less held twice last year. So you know what? There you go. We've got Elders and certainly Metcash at the moment looking like opportunities to buy, and in this sort of volatility and this little bit of weakness we're seeing at the moment. Um, the next one I want to have a look at is Macquarie Group, MQG. Is this an opportunity at the moment? Um, and you can see it has broken that short-term trend. So anyone who's got a sort of a shorter-term point of view wouldn't be too interested in this. But what I'm going to do, I'm just going to get it onto a monthly chart to get a better feel for this. And you can see it's starting to look weak, isn't it? Now, if you look at Macquarie Group over the last really 10 years, It's beautifully, hasn't it, really held, and again, it held support. I think watch out, guys. I think if we can get Macquarie around that 160, even 157 right on trend, I think for those long termers, you've got a good buying opportunity to get into good dividend stock with growth if you've got that long term point of view. So maybe not just yet. The price action this month's actually looking a bit weak. Wait, if it goes down a little bit further, down to that 157 level, opportunity knocks to get a little bit of Macquarie. Let's have a look at CLW, which is Charter Hall. And you can see this one's a little bit harder because it has broken monthly trend. So I'm just going to try to flip around a little bit to all the different charts to get a feeling for this. Yeah, and again, isn't it? I think just looking a little bit weak, I wouldn't go for this one just yet at the moment. But possibly if it came back and got anywhere near that $4, maybe 4.10, I would start having a little bit of look at this story again. It's giving a healthy dividend, one of our preferred dividend plays, but just be patient. And I think if it goes anywhere near $4, Charter Hall, opportunity knocks. PPE, and again another nice little dividend payer, over 5%. Again, this company actually delivered and delivered, and the share price performance has been reasonably poor. I'm going to have a look at this on a monthly to get a longer feel for it. And again, really doesn't it? Looks it's actually held a lot of support around that $3. I think if you've got that long-term point of view, as long as it's hugging, or what we call hugging that trend line on that monthly, I'm fine with it. Um, so if you like PPE and you've got a long-term point of view, you're looking for a dividend stock, it has held on that monthly beautifully above that $3. I think I want to look at this on the weekly. Yeah, I think you can buy PPE. I think even now really, but maybe if you can get some closer to $3, I think it's well worth having a look at. Certainly not trending, and certainly obviously not looking brilliant on the charts. You've got 9 as well. It's looking weak on. First of all, you look at that and it's looking weaker, isn't it, on that weekly chart. So I'm going to go for the monthly, try and get a longer time frame on this. And again, I wouldn't be buying this one yet at the moment. Look at the price action; it just doesn't look too good. This could go a little bit lower, but I think if you take that long-term approach, if you can get a bit of NEC around that 150, 160 level, possibly opportunity knocks. And again, these are all good quality companies, good dividend paying companies, and of course, you just want to buy them as cheaply as you can. Um, ORA, and again, interesting, isn't it? It's broken that $3 level, and if you actually look at it, it doesn't look healthy at all. And again, it's broken trend as well on that quite a long time ago on that monthly. But those COVID lows, now the company again hasn't done anything wrong. It's a good company. It's not. This is again. It's not really CTM stuff. What I'm talking about here, we're talking about dividend stocks that are getting them at a good opportunity. But I think if you can get ORA around that 250, where it traded over COVID, and it was trading 7 years ago. I think if you've got that long-term approach, you could be well rewarded. So possibly opportunity knocks. And I'll tell you what, if you're looking for the opportunity, it's broken. It looks like it's broken that $3, and it just go back to that weekly. Have a look at this. Yeah, and look, it doesn't look good, does it? If it looks like that by the end of the week, you know what opportunity knocks. If you can get some of that around 260, a really good dividend paying company at a good price, well, opportunity, like I said, an opportunity knocks, and this is what we're looking for here at the moment. We've got SHL again, Sonic Health. Paying a nice little sort of 4.5% dividend. Strong company. It's in a downturn. Is it going to hold 30? And you'd look at that on a weekly chart, and you'd most probably say it's going a little bit lower. How low could this go? And again, look at it on the monthly. Certainly, it's not trending at all. Certainly, the market's not interested in it. But for that long-term investor, for that long-term view, I would argue if you can get a little bit of this around $28, that's where you want to start nibbling away. And maybe if it went a little bit lower, 25, you could get a little bit more, and that would take you back to where it's that sort of 2018 prices. Um, so yeah, if you can get some around 27, 85 around that sort of trend line, possibly if you've got that long-term approach, you're getting a good dividend stock, and hopefully over that long term you could do really well. You know what? When we do these videos, we want to give you always ideas that could make money. The market's looking like it's going to be tough next year, but certainly there's a lot of people out there looking for the quality stories and looking for the good dividend paying stocks. There's a few ideas today. There's going to be more coming up with this volatility, and we'll be keeping an eye on those equity story dividend stocks for you and recommending buy some if you get a little bit of volatility and you can get some at a better price. On that note, thank you very much for listening to Equity Story. I hope that's been useful, and have a wonderful rest of the day. Thank you. Bye bye.